Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is Friday. This report is actually from Monday, the 25th of January, 2010, but this is, of course, the 22nd. Wanted to go ahead and pump out a video a bit earlier. Had planned this for Monday, but definitely moved to bearish on the market as of the close of trading today. Was actually an indication of bearishness below 1110, we'll call it, but as we mentioned last week, a break below the very round level of 1100 in the S&P 500 cash index would suggest to us a move out of our bullish exposure and into officially bearish on the market. That move actually did occur convincingly over the last 2 days of sell-off. So we're going to go ahead and look at the intraday chart of the market. This is the E-mini S&P 500 futures contract, and as you can see, for those of you who follow the videos, these are proprietary indicators, our intraday dynamics, as it were, and this is kind of how we gauge where the market is likely to go. And as you can see, impressively, we've had this, of course, Friday close near the low of the week. This, of course, was a holiday shortened week. We had a close of 109150 to 9150 on the market, right off the low of the day. We had mentioned repeatedly that although we were bullish, we definitely were expecting, given the rampant complacency in the market and underlying sentiment indicators, which we view from a contrarian perspective, that we were likely to see at least a 2-3 day pretty intensive sell-off. But nevertheless, we are officially going to bearish, even though the market could certainly recover. We have had a pretty impressive correction over the last couple of days, and arguably, if you look at this chart, over the last 3 days, which, speaking of which, as you can see, this is Friday, Thursday, Wednesday. This was Tuesday, the first day. This was last Friday. But as you can see, Tuesday we had some, obviously green means bull, red means sell, and that's the bears are in control. And as you can see, we had quadruple threat bullish bias, accelerating bullishness here above the trend, above the price technicals, the high of the late session of the prior day, and had a nice move up, closed near the high of the session on Tuesday, but it just simply wasn't to be. As you can see, we had a bearish gap open, weren't able to fill the gap, had the trend descending, had bearishness, did have a bullishness there, but accelerating bearishness here, so overwhelming bearish was the case. But as you can see, we did have this thorn in the side of the bears. And what happened? Well, we did get a move back into the close, back into the highs of the session late in the day. But it just really wasn't. It was a bit of an errant move, and actually quite surprising to us on Tuesday. Wednesday, that this move did occur, given the overwhelming bearishness of the market. Actually, late in the day, you saw some converging bullishness, but the market just definitely looking for a correction here, and lo and behold, we did get it on the day following, on Thursday, a meteoric, the antithesis of a meteor, so a falling rock, we'll say, and falling meteor. Break below the trend. And as you can see, again, kind of an errant bullishness here in this indicator right here, the XDiv -1, but overwhelming bearishness was the case. Break below the trend, below the low of the prior session, the couple of lows at right around 1128 in the market, as I remember, and just broke below that and continued on into Friday. And as you can see, overwhelming bearishness here, 3 days of bearishness, overwhelming bearishness here, and all these indicators. We did have this bullishness indicator here, but overwhelming has been the case of bears, and as such, they have controlled the market for a move down of around 60 points in the S&Ps. So we're going to go ahead. So let's look at the intradays. Probably going to get a snapback next week, but again, of course, we'll gauge the intraday dynamics from here. But looking at the daily chart of the market, we actually, as mentioned, moved to officially bearish on the market. A break below 1100, we call it. That's our key measure of trend following support resistance around this blue level. Would have suggested a move to neutrality, but a break convincingly of both sets, the horizontal significance of 1100 and the trend following significance of 1110, were to suggest a bearish bias, which, given the close and the impressive breaks over the last couple of days, definitely warranted a switch out of bullishness, and not just to neutrality, but an official move to bearish at Friday's close of 1091.76. Well, that booked us a gain of 130.76. That's roughly around 600 points, or $30,000 per single ES contract. Again, like $5,000 to trade one ES contract. So that's 6 times return over the last 16 months. This is over the last 16 months, and this is all free. This is all in the videos that we send out, the free market analysis and trading videos that we send. As you can see, we went to bullish right there. Finally went to officially bearish. Right here, and locked in those gains and are now officially bearish. Will we get a retracement? Very likely from 1091 probably back to 1115, 1110 to 1120, we'll call it, but definitely are moving to bearish. As you can see from momentum, we're short-term bearish, intermediate term gray status bullish. This will likely move. Short-term bearish in terms of directional movement, intermediate term neutral, which will likely move to support the bearish case pretty soon. Here's our VIX equity call ratio system that we coded for you guys recently. Putting up some nice winners again. It went short. It actually exited on the open today, which missed out on some of the run. 1107.75 was the exit, but as you can see, put up a very nice. This is the system over the last since last May, so almost a year. But as you can see, put up a nice, we'll call it $1,375 gain, $1,370 after commission. Of $5 a round turn. $1,370 was the gain. Just over a couple of days for this system. As we mentioned, the system has been really on fire lately. But as you can see, are we going to get a retracement? This fear is impressive. This suggests that it's likely only to be a minor pullback and retracement in the market, and nevertheless suggests that the market is in a directional move, meaning intraday strong directions, which is very good for the MiniAnalyst.com. Actually, so we can look at, let's see, there's the OEX Day Trader 1.0 putting up impressive winners, taking the day off a couple of days recently. Here's the grind. Let's see what it's done. Beautiful winners. Look at that. Beautiful winner right there, kind of overwhelming those losses. Winner, winner, scratch, beautiful winner, and another big winner. One little loss out of the recent days. Day Trader 5.0. 1, 2, 3. Taking a break actually last couple of days, unfortunately, but putting up some very nice winners there. 6.0, nice winner, scratching right there. Day Trader 7.0 not trading. Day Trader 8.0, wow, has been putting up some impressive winners. Boom, boom, scratch. Had a lot of scratches on that day. It had left a scratch on our head. We had this double bottom. Tried to break below here. As we mentioned, this was around 1126. Just went back to the upside. But nevertheless, we're going to go ahead and move over, running out of time here. How have our portfolios been doing overall? Well, as you can see right here, MAPDT version 4.0 HR gains a staggering $15,000, almost 60% over the last 9 days, and this is today's gain of $4,870. So when we get these big moves in the market, our portfolios really shine. Generally, 80 to 90% of the profits are made on 10 to 20% of the trading days. So you really have to position yourself to make sure you weather any sort of drawdown and be active for when you have these meteoric rises of, say, 60% over just the last 9 days. And we do expect these moves, these significant moves, to certainly continue, given the market, as you saw, the volatility indices were impressively higher, suggesting we're going to get some nice moves. But there you see the MAPDT version 4.0 leading the way now at 60%. TTTHR, these of course are high risk, high return portfolios, was leading the pack, but got edged out today over the last 9 days, gaining 52% for the Triple Threat Trader HR. We actually are running our yearly special right now. This is our yearly sales event, and what this means is you'll not only get lower commissions, over 20% lower commissions when you subscribe to a year, 4 quarters, but you'll also save an extra 25%. These are already special rates right here, but we'll go to the MAPDT version 4.0 HR. We'll just click on that, and all you have to do, add to cart, and we're going to need 4 of those. We'll take that out of there. We're going to need 4 of those. Recalculate. So that's $10,000 for a year. But if you put in yearly, that should do it right there. You're going to save $2,500 on that portfolio. Chat with Support Team live at the website. If you have any questions, shoot us an email to admin@MiniAnalyst.com. Hope you guys have had a great week and a great weekend, and we will see you next time.